Stocks and bonds are up. Gold is down as we finish up the next to last day of the week. Don't forget, at the close of the market on Friday, we will be recording for you our comprehensive review and forecast. Let's jump into this market. We always start with the S&P 500 on the weekly chart. Looks like we're going into another up week. Market up just barely as far as the S&P 500 goes. Those 500 big stocks up just 0.5%. But it is another big green up candle that's been forming over the course of the week, continuing to push through that weekly trend line, getting ever closer to a crossover going up, but doesn't look like we're going to have a weekly vertical crossover by the time this week ends. Derivative oscillators flipped over to positive, but just haven't quite pushed through, and we have to have that actually occur. Why? Because you can have it bounce off the red signal line. That's possible. Again, we're going to obey our rules. Let's go next to the 2-day chart. What do we see going on there? Well, looks like things could be topping as far as the 2-day chart goes. Back on last Friday was the last green up candle. We saw on Wednesday when things ended, it was a red spinning top open box. That means some indecision tending down. And of course, so far, we're trying to almost form another sort of red spinning top, almost a doji. Derivative oscillators losing momentum. This is just the first day of the latest 2-day candle. It'll finish forming on Friday. Derivative oscillator losing energy, price percent oscillator still heading up. But again, maybe the market's just taking a breather and is going to start moving back up again as far as those Heikin Ashi candlesticks goes. On the 2-day chart, we'll keep an eye on things. And we go, of course, from the 2-day, which is a confirmed up move, the weekly's confirmed down move. We look at the 4-hour chart, and we've really seen things top in the afternoon on Friday, last Friday, and then down for a day and really sideways and sort of sliding on. It's in a confirmed down move on the price percent oscillator. Remember, that's where we get our confirmed moves. Derivative oscillator gaining downward momentum. So we're waiting. The markets are in flux, waiting to see how things will shake out. Don't have a trade because the weekly and the 2-day are moving counter to each other. Remember, they have to both first be moving in the same direction before we then look to the 4-hour chart as a trigger, unless, of course, we have a triggering event, which is a weekly vertical crossover. And you can look back in time on that weekly chart and see time and time again how it portends accurate moves for us. That's why one of our 2 ways of trading is with weekly vertical crossovers. The other is the weekly and the 2-day moving in the same direction, pull back on the 4-hour chart, then it turns and moves in the same direction as the 2 bigger charts, and that's your trigger for jumping in. Want to know more about what that means actually? You can buy our book, Charting Your Way to Wealth. We'll be happy to provide that to you. You can see how to purchase it in the show notes. Now, let's keep moving along. We go to QQQ, that's the Nasdaq 100. We see again, it also moving into a 3rd week of up movement. As we look though, and just again, always pay attention to the wicks. We see the wick on the prior week's candle, and of course, this current week hasn't even gone as high as that. So that shows you some slowing as far as the movement over the course of this current week as compared to the prior week. Derivative oscillator gaining upward momentum. Price percent oscillator may end up crossing over, going up. So we'll hold our breath and see what happens. Don't forget, if you subscribe to our texting service, which you can do for free, you can see how to do that in the show notes. You have to live in the States. But anybody can listen to the comprehensive review and forecast, and we'll tell you if that's a confirmed weekly vertical crossover. The Qs was up for the day 0.65%. We go from the weekly to the 2-day. What do we see there? Again, sort of another sideways slide. Just the first day of this latest 2-day candle. It looks like it's a green doji, means lots and lots of indecision tending up, but our oscillator, as far as the derivative oscillator goes, losing upward momentum. Price percent oscillator, however, is still heading up. So we've got confirmed up move on the 2-day, weakening, a confirmed down move on the weekly that may turn into a crossover, and that 4-hour chart is still in a confirmed down move. Derivative oscillators negative, started losing some downward momentum at the end of the day. Price percent oscillator still heading down, getting a little flatter. And of course, we can see up movement in the morning and in the afternoon on that 4-hour chart. So again, just like with the S&P 500, waiting for things to shake out. Now, we go from stocks to bonds, up 0.66% for the day on TLT. What do we see going on there? Well, again, things topped out in bonds all the way back on the week ending the 4th of January, and then sort of sliding sideways down, although the derivative oscillator is still heading up. I'm sorry, losing upward momentum. Price percent oscillator is what's heading up still, and that's, of course, our main indicator. We really can't draw a trend line at this point since it's been violated. We'll see if that sets itself back up again. Nowhere near crossing over, going down. 2-day chart is, of course, still in confirmed down moves, but the latest full 2-day candle, green spinning top tending up. We saw that portend come into fruition. The first day of this latest 2-day candle, a green up candle, again has, and the price percent oscillator pretty much flat, a little bit down, derivative oscillator losing downward momentum. So again, don't have a trade at this time. We look at the 4-hour chart. It crossed over going up back on the 23rd and has continued for the last day and a half to move up. So we'll watch and just wait and see how things shake out on bonds when that occurs. And it will occur. Just a lot of flux going on, market trying to decide what it wants to do. We go from bonds now, lastly to gold. Gold was the only thing down for the day, down 0.16%. And of course, gold peaked somewhere back, actually it peaked back on the 4th, the Friday the 4th, the week ending then, and has really gone sort of sideways since then. The 2-day chart, of course, flipped over going down. The weekly chart still in a confirmed up move. Derivative oscillator's been losing upward momentum the last 3 weeks, going on 3 weeks. That 2-day chart crossed over going down back on the 2-day candle ending Friday the 18th and has really just gone sideways. It hasn't moved below the bottom it hit on the 2-day candle back on the 18th. So really a sideways slide tending down, derivative oscillator gaining downward momentum, price percent oscillator heading down. And what's that 4-hour chart doing? Well, that 4-hour chart has been in a down move since it crossed over going down back in the morning on Monday the 7th of January. What it really did as far as price movement goes, slid sideways and up until a big drop on Friday the 18th and sort of bottomed out there. We're just waiting again for everything, including gold, to settle out. And once we are able to get it to settle out, perhaps we'll find moves. Remember, first rule of trading is don't lose money. Second rule of trading is make money. And we've got to have markets with confirmed movement in order to do that. And part of the learning process is learning when the market is advantageous for you to trade. And we are going to practice, practice, practice until we get perfect. That's how you get to Carnegie Hall. Practice. And that's what we're going to do. It's not always fun, but it's worth the time and effort and energy you put into it if you will stick with it. Don't forget, in our show notes, you can also find the daily market worksheets, weekly market worksheets, trade worksheets. Be sure to fill those out, particularly that weekly market worksheet. If you're limited on time at least once a week in every trade you do, you got to use that free trade worksheet. If you want to sponsor what we do, be a Patreon supporter. We so appreciate that. Lots of goodies there. Thank you so much, my friends. Let us hear from you. CW@chartingwealth.com. God bless. Take care.